All right, so this video is going to be limit orders versus market orders. What are the pros and cons, and when do you use the different types of orders? Okay, assuming you know how a DOM works, that's what you're seeing right now. Now, if you don't know what you're seeing, and this is confusing because there's so many numbers, you're going to want to watch my how to read a DOM video with example trade. And it's almost an hour long. However, it really dissects everything you're seeing, and it will definitely make this video make a lot more sense if you watch it. Now, if you're familiar with the DOM and what you're seeing, then what I'm about to tell you on how these different orders work will make sense. I just want everybody to be able to comprehend what they're seeing and why you would use one order over the other. So, as most of you know, there's two ways to enter a market. You can either market order in, which means you're buying the current price that is trading right now. Or you could limit order in. That means you will not get into the market. You want to wait till the market hits a certain price, and that's where you want to get in at the market. Okay, they both have their time and place, and they both have their pros and cons. One is not better than the other, in my opinion. Now, who would use certain orders? Now, if you're like a swing trader or a long-term investor, you may get away with just using limit orders. You may not even need a market order. Now, market orders are good for precise entries. Market orders are great for intraday traders, day traders, or just scalpers in general, such as myself. If you're looking to nail a precise move, market orders are awesome. In fact, most of my trades are market orders as far as entries go. Now, I do use a limit order to exit. Now, the thing is, when you buy in a market and go long, you're going to have to sell. And if you short the market, you're going to have to go on the buy side to exit. So when you enter the market, you enter from one side of the transaction and you have to exit on the other. So if you're a buyer, you become a seller, or if you're a seller, you become a buyer. It just depends on what side you get in. So I do have a term I use that helps me remember how to make precise exits, because when I first started doing DOM trading, I would get very confused on how to enter and exit moves, and that can definitely cost you a lot of money if you don't know what you're doing. So we're going to be looking at one of these DOMs, and we're going to have some example trades for both market order and limit order. The first order type we're going to examine is a limit order. Okay. Now, before I play this video, this is a pre-recorded session. I just want to sort of recap some things and just break this down a little bit. Now, on this blue box right here, we're going to be looking between this blue column and this red column, and this is the 10-year market. We don't care about any of these other DOMs. We just care about what's going on right in here between 8045 and 8050. Okay? So currently the market is trading between these two prices, right? And this is my price right here, 8050 and 8045. Okay? My bids are meeting my asks right here. So currently we have 3,068 contracts on the bid at the current price. We have 3,595 contracts on the ask on the sell side. Now, these inside numbers are my market orders. Currently, 52 sellers have sold into the bid over here. So this 3,068 has to be bought up by market orders before the price ticks down. So you would need to see this box go up an additional 3,068 contracts before it ticks down to the next price at 8040. Okay? And likewise right here, these are the buyers. Blue, buyers. Red, sellers. 799 buyers have bought into the ask. So 799 contracts have exchanged at this 8050 level. An additional 3,595 contracts have to be bought. So you would see an additional 3,595 contracts print where this blue 799 is. So you would add 799 plus 3,595, and it will print right here where this green box is. And once all those contracts are bought up, it'll tick up. And when it ticks up, 6,126 contracts have to be bought out before it can tick up further. Now, if you've watched my DOM video, how to read a DOM video, you'll know that these numbers are always changing over here. People are either canceling or they're adding. So it's always changing. But we're not going to really get into that since I've already covered it. Okay, one thing that helps me remember the execution of a trade, blue in, red out. Okay, if I'm going long, blue in, red out. Okay, if I decide I am going to limit order here, that means I'm going to be right here with this 3068 is. Now, the downside of a limit order is you have to wait in line. You have to wait in a queue. And I do cover this in that DOM video. So I will, if I trade one contract at this level, you'll see this go to 3,069. Okay, so 3,068 contracts have to be traded here before I get filled. And what that means is when you get filled, you're going to be in the market. I'll be in the trade, and I'll be long at 8045, hoping the market will go up. So now if I'm in this line, half of this cancels. Well, that moves me up further in the line. That means less market orders come in. Now, limit orders don't move the market. Market orders move the market. So just because there's 3,068 orders here and there's 3,595 here doesn't mean the market's going to move until market orders come in. And that's what these inside columns are. These are the sellers trying to hit the bid, and these are buyers trying to hit the ask. So pretend I get filled here, and the market ticks down. Well, I won't be able to really scratch the trade and break even. And in fact, I think what we'll do is we'll go ahead and play the video so I can show you exactly why a limit order can suck and when a limit order can be good. Now, before I play the video, I do want to quickly touch market orders. Now, there's two ways to get into the market. Again, this bid, I can wait in line at the bid, or I can get in now. Remember, blue in, red out. So if I decide to market order, that means I'm getting in at a tick above 8045. So I can either get in here at this price, 8050, right now with a market order, and you'll see this go to 800 if I decide to buy with a market order. That means I'm a tick above. Now, you may think that's terrible. Why would you want to market order a tick above? Well, there is a time and place for that. Again, so I either can get in here, a tick below, but I have to wait in line, which is a con, or I can buy the market right now at this price above, but the problem is I'm a tick above the perfect entry. So it would have to tick additionally up to 8055 before I could make profits. So, you may be thinking, yeah, market orders don't look so good. Well, I'll show you. Same thing goes for the reverse on the ask. If I decide I want to go short, I can either get in and wait in line in this large order here, this 3,595. I can wait here and try to go short at 8050, or I can market order in right here at 8045, and likewise I'll have to wait for the market to tick down one more tick, so basically 2 ticks before I'm in the money. Okay, so you either wait in line or you have to wait for the market to tick 2 times if you market order. And I think playing this will help. Okay, so for example, let's do a short. Pretend we're doing a short entry. we're going to do a short entry at 8050, and we're going to do a limit order. So we're going to go ahead and get into this 3,624. Okay, we're going to wait in line here. Okay, so we need to get filled. So this 799 needs to go up. Of course, and now you saw the number did change a little bit. Looks like folks are adding and subtracting contracts. It's going 3,900 here. Okay, so that means we would be further in line, okay, because an additional contracts have been added after us. So we're a little further. Now it's at 4,059. So we're at we have 500 contracts behind us. I believe we got in around 3,500. I could be wrong. Now there's 4,300 contracts. So we would be further in line. Okay. However, nothing's been executed here. It's still 799. So now it's 829. Okay, there we go. You saw how it blipped up very quickly and then came back down immediately? We would have been filled there. Okay. Here's a problem with simulation trading. I'm going off track. Generally, when you're doing simulation trading and you have a limit order, generally when the price touches it, you don't wait in a queue in simulation trading, so you automatically get filled. So simulation trading is completely false, and it can give you a false sense of reality, and you won't be prepared for real life trading. I just want to throw that out there. There are simulator trainers that allow you to wait in line on limit orders. Just want to throw that out there because the simulation trader DOM on TradeStation, which I used to have TradeStation a while ago, they will automatically fill you on your limit orders once the price tags it. So that's just a little FYI. So we're filled. Okay. Now that we're filled and the price is ticked down, where can I break even? Okay, red. So we're going to reverse what I was saying. Blue in, red out. Now it's red in, blue out. Okay. Our entry was red. Now our exit has to be blue. Remember, if you're going to be a seller, you're going to have to become a buyer and vice versa. So now we're in at 8050. We got filled right here. We are locked into this. So red in, blue out. Well, which two blues will get us out? We can either put a limit order here and pretend we're just trying to take a tick from the market. We're not trying to take some wild move, and this sort of helps with the training here, so you get the point of what's going on. So I either can get out here or I can get out right here. Okay, so I can market order out, and if I market order out right here, it'll become a break even. We obviously got in at 8050 on a limit order on this red box. Well, we can limit out for a one tick win. So we can either market out for a scratch, meaning we break even because we think the market's going against us, and break evens are really good trades to master. Or we can try to wait in this line of 4,334 contracts and hopefully get filled and make a one-tick winner. Okay? And that's the thing. When you do a limit order, you want to make sure you nail the turning point of the market. Okay? If you're not sure if there's a turning point, don't limit in, market order in. If there's a lot of momentum either up or down, you want to market order in. Okay? That's the pros of market orders, is you can hit it right before the market goes. Okay? Okay, now here's where it will be a con, and you'll see. We're going to let this trade play out. It takes about 2 minutes or so. And obviously the market's looking very strong on the bid. It doesn't look like my short's going to work out. So I can market order out for a scratch. Red in, blue out. Okay, now that it is ticked up, this isn't good. This is exactly why you want a limit order This is why you want to put your limit order in at exactly the most precise turning point in the market. You want to nail the turning point. If you know there's a wall, if you know there's a turning point, that's when you can use a limit order. Because now it's ticked against us, right? Remember, red in, blue out. So there we go. So we got in here at 8050 in this red box that no longer has numbers because the market has ticked up against us. Red in, blue out. So there's only two ways to get out now. We either limit order out or we can market order out for a loss. Because remember, red in, blue out. We were hoping the market would go down. So now the market has blown through us. We can take this one tick loss and get out now. Or what we have to do is we have to limit order for a break even. Okay? And ideally, you want your break even trades to be a market order. That way, your break evens are executed ASAP. Right now. You want your break evens to be, you want to be able to market order out of your trades on a break even if you're a scalper. Now, obviously, there's 5,261 contracts up here. The market looks way stronger, and there's only 2,078. If we're trying to get this break-even trade at this 8050, we got to wait in line, and we're going to be 2,078 contracts have to trade before we can even break even. And that may not even happen. You know, the market may not trade that price anymore. You may not have seller market orders hitting this price. So now you're kind of screwed, and the only thing you can do is take a one tick loss right here. Let's continue to let it play. Boom. So you could have took a break even. Right there, you would have got filled. Or you can stay in the trade. Maybe you decided to stay in the trade instead of taking a break even. Okay? And what you can do is you can have a limit order here ready to get out. You want a one tick win. All right? Let's just watch it because it will tick down. And it's not going to take that long. It's about a minute or so. So, and here's the deal. Since we did get in at 8050, we could now market order out for a break even. Remember, red in, we got in here. Blue out. So now we can market order out for a break even. So ideally, if you do limit order in, you really don't want the market to tick past you. Now this has creeped up to 3,000 contracts. It's starting to get stronger here. Boom, there you go. That would have been, if you were sitting here in line, you would have got filled. You would have had a one tick winner. Okay. I hope that makes sense. Rewatch this video if it didn't, and hopefully you'll understand. Or watch my How to Read a DOM video. Now remember, we got in here. Okay. Let me rewind it just a tad. Okay, so we're here. We're already filled at 8050, and now we're already working our way out. We're sitting in a limit order over here, and we're hoping to take a one tick profit. And if we need to, we can break even by hitting the market order. So now I'm managing my trade. If it looks like it's going to tick up again, I would market order out right before it ticks up, so that way I can get a scratch trade. Boom, there's your win right there. So now I'm going to rewind this and let my quality catch up real quick. Well, it may take a minute for the quality to catch up. So now we're going to use an example of when to use a market order. Okay? So I know for sure the market is going to tick up right here. And what I'm going to want to do is I'm going to blue in, red out this time. We're going long. Okay? We're not going short. So remember, on short it was red in, blue out. Now it's blue in, red out. So we have two choices. We can try to get filled right here at this 2,383 contracts, or we can just market order right here at the 8015 level. So we're going long. So we're only going to either limit order or market order. This is going to be an example of a market order. All right, let it play. Okay, and we're going to market order in. And I'll show you why. Boom. Did you see that? I hope you saw that. Now it's at, see how it's at 3,603 contracts versus 585, and a shitload of market orders just hit right here? Let's watch that again. Okay, and it actually lifts because you'll see some market orders print right here. Boom. The market briefly ticked up, but it got pushed back down by 190 contracts. Okay. There's 3,603 contracts on the bid, and there's only 585, and the buyers have marketed order in over 2,584 contracts. What does that tell me? That tells me this is going to go up. Okay? The market obviously has a stronger bid than ask, and the market orders are bigger than the sell orders. So Team Blue's winning. Team Blue has a larger number here, a larger number here, and Team Red only has a smaller number here and an even smaller number here. So Team Blue is definitely ready to push this up. So I'm not going to get filled here. Only 128 contracts have printed here. There's no way I'm going to get filled. So I can't do a limit order. And I'm going to miss out the trade if I don't market order in. So, you know, it's either I miss the trade trying to get a fill, and I know from experience that this is not going to fill at 8010. And it's looking like it's ready to go up. So trade with the momentum. This is where the market order is very awesome. Now, I'm going to go ahead and market order here. So if I added one contract to the market order, this would go to 2,585 contracts. And this would drop to 584 contracts. And when this market order's up, I'm going to have a limit order sitting at 8020 for a one-tick profit. Remember, blue in, red out. So I'm going to want to be waiting in the queue right here. That's a very large queue to hopefully get filled for my one-tick win. So we're going to market order in. We'll pretend we are in at 8015. Boom. Now we're in. Now it ticked up. Now we can break even with a scratch using a market order. Blue in, red out. So we blued in right here. Now where's our red? So we can either market order out for a break even, or we could be waiting in the queue for us to get filled and get a one-tick win. Personally, I would be doing both. I would be waiting in line right here. However, I would be ready to hit the market order for a break even if the market looks like it's going to drop in on me. That way I can just scratch the trade, break even, I'm out a little bit of commission, and that's it. So, boom, and there we go. We would have got filled. You saw how the market ticked up. We would have made a one-tick winner. Let's watch that again. When do you market order in? In fact, my DOM, how to read a DOM video, has a perfect market order trade in it as well. So we market order in here. Okay. Oh, well, shit, I didn't stop that soon enough. I was going to show you something, but we'll go back. Boom, and there we go. We would have been filled right there. We would have been waiting in line. You saw it cleared it out. With 3,610 contracts, we would have made a one-tick winner. So, what happens if you market order in and the market doesn't tick up, well, you're in trouble. Okay, pretend like we marketed order in and the market has not ticked up. Well, how do we get out of the trade? Well, remember, blue in, red out, because we're going long on this. So our red out is here at 8010 or here at 8015. So either I limit order at 8015, hopefully I can make a break even, or I market order out for a 1-tick loss at 8010. Okay? Now, that's the thing. You want to market order right when you know the market is about to tick up, because once it ticks up, you can manage it with a break-even trade and you can manage it with a market order. So that means you can immediately get out of the trade and you don't have to sit in a queue. Because now if I want a break-even trade, remember blue in, red out, I market ordered here. The market did not tick up yet. I would have to wait in the queue of 594 to break even. Or I can take a 1-tick loss. Okay? And this is what's going to happen if you don't nail it right before it goes. And sometimes that happens. So, you know, pretend we're trying to break even. Now we're sitting, even though we market ordered in right here at this price, we're waiting in the queue of 895 for a break even. Now it did briefly drop to 384, so we would be further in the queue than this 1400. Boom, there we go, break even. Okay? Hopefully that makes sense. I may redo this video later down the line, so that way it flows a little better. But that's just the difference between market orders and limit orders and when to use each one. And just always remember blue in, red out, red in, blue out. Okay? And when you're looking at this, you can't have market orders without limit orders, and you can't have limit orders with market orders. You need both types of orders for the market to even work. Okay? So you just need to figure out what side you want to be on and which execution, market order versus limit order, would be good for you. And just to recap that, you want to nail the limit order right at a turning point or at a wall where you know the market is going to stop. And if you can nail a limit order, you can do a break-even trade without the market ticking up. So if you get filled on a limit order and the market doesn't tick past you, you can break even with a market order, which is always good. Ideally, you want to put yourself in a position where you can market order out for a break-even trade. You don't want to have to limit out for a break-even trade, because if that happens, well, you may not get the break-even, and then you're going to have to take a loss. And again, market orders are for momentum trading. If you know the market is going to tick up and you can't get the fill, do a market order. So I rewound it again. Let's watch this limit order. Pretend I'm sitting in this queue of 2,374. I'm going to write that down. 2,374. Okay? So I would be at position 2,375. And this is just a quick recap. Only 100 contracts have traded. Only 103 contracts have traded. I'm sitting in line here. Okay? I'm not getting filled. Only 128 contracts have came in. And then there it goes. It ticked up. Okay? Now the market is ticked up. Now I'm not in the trade. The market's moving away from me. I did not get filled, and I would have not made any profits on that. Because again, only 128 contracts traded here. I would have been in position 2,375. So if you know the market, if you didn't nail that limit order and you can't get a fill and you know the market's about to go, market order in. So let's, again, watch the market order. Why would we market order here? Well, we can't get filled here. I know I can't get filled here. Okay, well, look how much size just traded. Look how low this ask is. The market just ticked down. The bid is bigger than the ask. Everything is telling me this is going up. And the only way I'm going to get in is if I market order in right before it goes. Market order in now. So you see a steady stream of contracts were coming in. Boom. Now I market ordered in. Now I have my limit right here. Remember, blue in, red out. We blued in here. I have my limit order sitting in this queue of 4,430. Okay, I have to wait in line. But I want to take a one-tick profit. Okay? However, I'm watching this. I'm watching this number right here. I'm watching the bid and the ask. Okay? Because if this bid starts to weaken up, it tells me the market's going to drop in. Remember, blue in, red out. I got in here with a blue. The only way out is either to take a win or to market order out for a break even. So I'm watching this. So it's obviously almost at 3,000 versus 4,400. So the bids are pumping up, which is good. So I got my finger on the key, and I know that just ticked up. I would have made profits because I was automatically waiting in line. And when I take a market order or a limit order trade, I immediately have my limit order for profits immediately hit the market. So that way I can get in line sooner, if that makes sense. And as far as bracket trading goes, I think that's definitely going to be another video. What I'm saying may not make sense as far as bracket trading goes. And I'll definitely do another video on that. However, again, I just want to show you how to use limit orders and market orders. Hopefully this made sense to you. And you know what? Have some good trading out there. Good luck on everything. Talk to you guys.